me switch to the weekly for a much cleaner look at the share price. Do you guys see what I'm seeing? I'm seeing a stock that likes to bottom out down here at around 150 to 170. And I'm also seeing a stock that likes to have some runs, to as far as 231, sometimes 261, and even 305. So there's a lot of opportunity to make a good 25 to 50% here. This is the weekly chart, mind you, mind you, but we are right at demand on this stock. If we're trading just off of the charts, it's looking like we might go in and buy this stock as soon as it comes down a little lower. We're looking for 170, 150, somewhere in there. Right now it's 176. I would probably hold off and see if it comes down lower. That's if we're trading the technicals now. The reason I'm doing my due diligence is because I don't know the stock that well. I don't. So I'm gonna do some research here with me. Let's go through. This is how I do my due diligence. Okay, I go to TradingView Financials and I look up the stock's ticker name. I go to the income statement and immediately the first thing I look at is the quarterly, and I go quarter by quarter and see, are they growing? Total revenue. Okay, so they've been growing. Total revenue, quarter one 2022, 153 million compared to quarter three 2023, 188.34 million. So, a 30 million increase over the course of a year and 2 quarters. But the big problemo is that, okay, they're growing, that's cool. But the big problem here is the cost of goods sold. For those of you who don't know what that means, let me just click on this. It should tell you. Cost of goods sold shows the amount of money a company spends to produce or manufacture the goods they sell. And you'll notice that is one hell of a, that's pretty high. If you're selling a hot dog for $1, but it costs you 90 cents to make that hot dog, you're only making a 10%, not 10%, yeah, 10%. You're only making a 10% profit or 10-cent profit per hot dog sold. Ideally, you would want to make as much as possible, right? It's business, it's America, we're trying to make money. So ideally, you would want to keep your cost of goods sold down as much as possible. But this thing has been increasing. Here, it increased so much that the cost of goods sold was actually way more than the revenue here in quarter three 2022. A total revenue of 145 million in quarter three 2022. Compare that to the cost of goods sold increasing to 180 million. And since then, it's been kind of just, if we were to plot this on a chart, quarter over quarter, we're kind of just going sideways right now. Since quarter four of 2022, we've had 184 million in total revenue, 176 the next quarter, then 193 the quarter after that, and then finally quarter three 2023, 188.34 million. So we have not been able to break above 200 million in total revenue. Meanwhile, our cost of goods sold has been increasing. So it's not even a profitable company because their cost of goods sold is ridiculous. Let me click on that. This is why we do due diligence. Yeah, they have to decrease their cost of goods sold. You can't run a company where your cost of goods sold is, first of all, more than your total revenue. That's just never going to be profitable. First of all, second of all, yeah, you can't sell a hot dog for $1, but it costs you $1.50 to make it. That's just doesn't it's just not going to work out. That doesn't make sense if you think about that for a second. So the cost of goods sold definitely has to come down. Let's look at the annual. Yeah, the cost of goods sold, man, that is high. That is way too high. Let's go back to the quarterly, but yeah, that cost of goods sold is concerning. Gross profit 27 million. Other expenses negative 61 million. Operating income negative 33 million. Their operating income it's negative as expected, especially when you have such a high cost of goods sold. Like it's just weed, right? Why does it cost so much? Pre-tax income negative 107 million. Yep, as expected. Net income negative 92 million. Wow. Wow, that's pretty bad. That like if we were to buy this stock on financials alone, this is pretty bad. I've never seen this before. That cost of goods sold is whoa. That needs to calm down. No, seriously though, that's pretty high. I've seen better cost of goods sold. I've seen cost of goods sold where a company it cost them 100,000 to make 200,000. Let me put it that way. That's awesome. That's good actually. That's like selling a hot dog, like I said, for $1, and you make essentially 50% profit off of every hot dog sold, so 50 cents per hot dog. And yeah, I keep using the hot dog example. Maybe I want hot dogs, okay? But balance sheet is what I look at next after looking at the income statement. So total assets to liabilities. Whoa, that is good. I like this is like whoa in a good way. Like whoa, they have a good assets to liabilities ratio. They have like yeah, 4 to 5 times more assets than liability. That's incredible, actually. I like that. This is probably a positive for it, but it's still the cost of goods sold is still that is still ridiculous, ridiculously high. Total equity, total debt. Okay, so on the balance sheet, it doesn't look bad. I don't look at cash flow. From here, I get out of here. So the biggest concern when we looked at the financial statements right now for me was the cost of goods sold. I don't like that. I don't like that it costs me 95 cents to sell a hot dog for $1 and then I only get 5 cents. I get to keep 5 cents for every hot dog. So that's not, we want to maximize profits as much as possible. And in this case, somehow bringing, I don't care if I have to use foam filler for the hot dog. Okay, but you get the point, guys. That's like the biggest concern there. And it doesn't help that we have the quarterly results for Q3. And let's go over this because they did report the financial results for its third quarter ended February 29, 2024. And let's see. Net revenue increased 30% in the third quarter compared to last year, but it's still 188 million. It still cannot break that 200 million. So they're kind of stagnating in that sense. Gross profit increased. Alcohol beverages revenue increased 165%. Yeah, so alcohol. So they're not just marijuana. They had to move into something else. They assume their cannabis is just I don't know what's going on there. Cannabis net revenue increased 33%. Cannabis gross profit 20.9 million. Wow, their gross profit actually decreased from last year. Distribution net revenue decreased as well. It was impacted by short-term challenges related to changes in the regulations pertaining to rebates, IT infrastructure outages, and weather. Net loss decreased, adjusted a bit. Okay, let's see. Reducing outstanding convertible debt. Ooh. Yeah, just see, this isn't. Okay, so they updated the fiscal year 2024 guidance. They lowered the guidance, so that's kind of that's bad. Let's see why that's bad. The cannabis company lowered its fiscal 2024 forecast for adjusted earnings before interest taxes for EBITDA to a range of 60 million to 63 million from its previous target of 68 million to 78 million. In addition, Tlry said it no longer expects to generate positive adjusted free cash flow for the fiscal year 2024, which is bad. I mean, that's bad because if you think about it, I just told you that they have not been able to break that 200 million, and their cost of goods sold is pretty high. And now they're telling us, oh, by the way, we're kind of gonna lower our expectations, and we're not really gonna generate positive adjusted free cash flow. So for the year, by the way, so that's if we put everything we know so far together, it's looking like this stock is not a buy on the financial. If we just as a whole on the if we just look at the company itself and not the charts, not a buy. Not for me at least. I don't like what's happening here. Another step forward for the industry is Germany. They voted to legalize cannabis for limited recreational use. And in the United States, 11 states may look to legalize marijuana in 2024. Five are seeking medical cannabis legalization, and six others for adult use. So, yeah, those are like the good positives. Like maybe in the future, but see, here's the thing: even if they expand in the future, their cost of goods sold, if it just stays that high, it's just not going to be profitable ever because they haven't been profitable. That cost of goods sold is just too high. I don't know about you guys, but I'd rather sell a hot dog and make 50 cents profit per hot dog sold than just 5 cents per hot dog sold because your cost of goods is just because I guess you're buying the more expensive buns. I guess think about that for a second. It doesn't even matter if they expand. It doesn't mean anything with how and the fact that they lowered the guidance. Yeah, no, I think that's enough due diligence for Tilray here. So if we look at Tilray, the company, I don't think it's a buy. If we look at Tilray as just the chart, we look at the chart, it's near a bottom that's been holding up since 2023, mid 2023 to be specific. But let me look at the daily. I think the daily and the monthly. Let's see the monthly. Ooh, the monthly is looking pretty ugly actually. It's looking like we might go lower than. We'll see what happens, but if it doesn't hold at 1.5, this thing's gonna go to $1, and that is possible because it is possible because that's what happens with companies that aren't profitable that kind of just continue to. They, let's look at Mullen. Here's an example. Mullen, bye bye. It just continued to dump. Bed Bath and Beyond, never to be found again. FSRN, another stock that just completely fell off the face of the earth. Even if they changed their ticker, it doesn't change that they fell off the face of the earth. So there you go. Let's see what else. What else are we looking at? Yeah, FSR. Even if they change their ticker name, it doesn't change anything. They companies that aren't profitable. This is what happens to them. Unfortunately, BKKT. I think that one's doing a reverse split and it's just been dumping since then. Even though it was going sideways here at 112, it was going sideways here for a couple of months. Even had some run ups, but ultimately, a bad company is a bad company. And that's going to be reflected sooner or later in the price, meaning it's going to come down. You want to see what happens when it's a good company? That's what happens. It just keeps going up over the long term, especially if you look at the monthly. So I just wanted to make some comparisons. So honestly, look, this is my opinion, and you could take my opinion with a grain of salt, but I think Tilray not a buy, not a good long term investment until they they gotta. I think they need to become their net income needs to be positive at some point, and maybe then I'll consider it as a long term hold. But if we're gonna trade it on the charts, then I would wait for at this point I would wait for 1.5. Wait for the lowest point. Wait to see if it comes down as low as 1.5. That is the biggest level here at 1.5. If it does not hold, what my game plan would be, buy in at 1.5 with a limit order. If it doesn't hold that and it breaks down, yeah, set a stop loss at 1.4 at that point, because you do not want, if this thing breaks 1.5, a level that it's held up above for a long time, if it breaks that, who knows how low it can go? It can go under $1. If it goes under $1, then they'll have to reverse split, and then you kind of just get completely screwed as a shareholder. Think about that for a second, because BKKT definitely, like, there's a lot of shareholders here that got absolutely screwed. They thought that it was going to come back above $1, and it didn't, and now they're going to get reverse split on, and it's going to follow the Mullen route. So if you guys don't know, Mullen just kept reverse splitting over and over and over again, and obviously shareholders are dead. They're not dead, but they're never seeing their money again. They're down like 99%. So you don't want to get caught in that. That's my opinion. Again, just as a company, I just wouldn't want to touch it. As a swing trade or day trade opportunity, just wait for 1.5 on the spot. I'm glad I didn't buy yesterday. Yesterday I did think about buying, but I'm like, you know what? Let me do some due diligence on this first and see what this is all about before I jump in. And I'm glad I did. I think this is probably one of the worst. This is probably headed to $1. It wouldn't surprise me. And maybe it gets some pops here and there because of, oh, this state is legalizing it, and then weed stocks explode. So that's definitely possible. But at this point, we like to buy bottoms. You want to buy the bottom, just wait for 1.5. And that's it for the video. Definitely set a stop loss. This is not one you want to hold a bag on, because you might end up in another Mullen situation where it just goes under $1 and they just keep reverse splitting over and over and over again. Especially with the fact that they haven't been profitable, they haven't been able to go over 200 million, and their cost of goods sold. If their cost of goods sold, if it continues to increase, that's then you're selling, like I said, you're selling a hot dog for $1, but it costs you $1.50 to make it. That's just not. It's just never gonna work out. And that's it for the video. These are just my opinions of some guy sitting in